Well, pausing the markets discussion, although they're still with us, Driggers and Craig. Joining us now live from the Old Mutual camera to discuss Rand hedge stocks is Arthur Karras, who's Senior Portfolio Manager at Old Mutual Investment Group, MacroSolutions. Good morning to you, Arthur. And let's start. We talk about the Rand hedge stocks, those big companies that are diversified, that have foreign exposure, and can do quite big things for investors with that weakening Rand or the strengthening Rand. So how are you thinking about these big companies at the moment?
Well, the thing to bear in mind is that they're attractive because we do expect the Rand over time to depreciate steadily against the currencies of our major trading partners, because we've got a high inflation rate. So that means that you're programming in a return source if you own Rand hedge stocks. So we do like the Rand hedge stocks. The concern is that some of them have done very well over the last few years. The Rand has been quite weak since about 2011, and as a result all of the big ones that come to mind have done pretty well, with the exception of the mining stocks. The mining stocks are probably the most attractive theoretically of the Rand hedge stocks, because they've got in many cases Rand costs and dollar earnings, so they've got far more leverage to the weakening currency than a company that simply earns all its costs and profits in foreign currency. But those have done pretty badly, I think, mainly because commodity prices have been so weak.
Arthur, we've seen a lot of these Rand hedges become expensive to a certain state on the local market. In your opinion, you as an investor yourself, is it not better to utilize your investment allowance and buy some of the peer group, say not British American Tobacco but Philip Morris, or not SAB, maybe Heineken or Anheuser-Busch? Is there not better opportunities outside, of the JSE?
I would absolutely agree with that. In our portfolios, we are currently running maximum offshore exposure for precisely that reason. So we're saying we want to be in equities, but and we want Rand hedge, but in fact the valuation opportunity exists far more in the broader offshore markets than in the narrow ones that we can pick off the JSE.
Arthur, let's do some naming and shaming. Perhaps get your top 3 most attractive right now, and maybe the 3 that one should keep their hands away from.
I'll mention the ones one that we really like, and that's Richemont. We do like the Richemont story. It's not that expensive relative to its history. We do like the luxury goods story over time. We think that there's still going to be growing demand from Asia, and we think you simply can't repeat the kind of, can't easily replicate the kind of brand name strength that Richemont has. So if you want to pick out one that we're significantly overweight in our portfolios, it's Richemont. Another one that we like that has underperformed recently, but we think that it could be coming to the end of that, is Datatec. Datatec is one of the smaller ones. It's a distributor of IT equipment on a global basis. It's had some issues in its American business with some of its accounting around debtors and with installation of SAP. We think most of that is behind it now, and especially with an improving economy in the US, we think that Datatec is quite well positioned for that. So those are 2 that we like.